We are live. What is going on, everybody? Hopefully, everyone can hear me and we can get this thing started. Give me 1 second. Get this chat up, make sure I can answer any questions. Basically, what we're going to be getting into today is how a routine can keep you on the right side of the market, right? A lot of people have heard that let me post this real quick. There we go. All right, now we are chilling. Hopium Jesus, what is up? Tommy, good evening. So basically what we're going to be talking about today is how your homework or doing your homework every single day can put you on the right side of the market, right? To make sure that you are doing what you need to do in order to set yourself up for success, right? Not just going into every single day with, okay, the last 5 minutes was up, the next 5 minutes is going to be up, right? We got to do our homework. And so that's what we're going to get into today. Oh, Chris B, Vito, Patrick, hola, hola. Double R, hey. So what we have here is an ES chart aggregated, the futures, S&P futures, but it's aggregated. And we are looking forward at the coming week, right? We know we have the Fed meeting coming up next week. We know we have some possible turbulence going on with the global conflict. So a lot of things to look at. So it's times like these that I recommend everyone needs to take a step back from their charts. What's going on, Alex? And make sure that they can refocus. Everything seems to be a bit negative or bearish or hawkish, however you want to look at it or call it. But we've got to understand that the market is forever changing, right? I don't know about some of you guys, right? Maybe we've got some whales out there that can move the market, but most of the time we're just trying to follow along with the market, understand where it's going, and be on the right side as it goes there. So the first thing that we do, or the first thing that I like to do, is I like to start on a monthly chart. We can see during the month of March, we have extended the range down to the low, right? We can see the market's actually at 42.14 right now, but we're just looking at the monthly. So we're in the lower range of February's range, but we're not really not really making any significant lows. Yes, Friday felt pretty bad, but really, in reality, fairly unchanged on the monthly, right? So I'm gonna go ahead and copy this over, right? And so right now, I actually do this thing for everyone that's in the TPO Bootcamp Discord called the Trade View. And basically, we're just seeing how we make that. And this is just a way that keeps me on topic with, or keeps me on track as a way to make sure that I'm doing my homework. And I just like to share it for the community. So in reality, what we get from the monthly is really not much information, right? We didn't see any range extension. We're still sitting inside the previous month's range, even though Friday did feel a little bit, scary with quotations on it, but really no change. So what we'll do is we'll head over to the weekly. And so we can see on the weekly, you can clearly see a trend here. Pretty pretty consistent, right? There is a trend forming from back here a little bit as well. So if we take a peek off this monthly low, right, pretty long trend there. So very, very tight inside this window. And that's what we can kind of expect. What I'm expecting this week is kind of a breakout, right? Once Powell announces the actual rate hike, once he decides 100% 25 basis points, or if he does a surprise 50 basis points, either way, I think however the actual news comes out, or how he says it in the meeting, is going to push us in one of the directions. So we are kind of looking at a breakout on the weekly. And we can kind of see, 2 weeks in a row, pretty much straight down, a little bit of buying at the bottom. No significant break here, though, right? We saw this huge rally. We saw a pretty big rally back here in January, kind of the same idea. So on the weekly, it really, the, the reality is going to tell us this previous week high and this previous week low. Any move above or below those two levels should give us the direction that we need to go with, right? I know that's a pretty wide range, and there's some levels in between, but this week was really just a chop, and so it's going to be one of those weeks where we really have to pay attention and figure out where they're trying to take price. I'm just copy and pasting this thing over real quick, guys. That way we can you guys can get the buds. But in reality, these the lows of this week would be good idea to mark, or at least to monitor going into the rest of the week, to make sure that you're tracking those levels, because a break of one of those levels is probably going to cause some stops to be triggered for sure, and then with some possible initiated selling or buying, depending upon what side the market's on. And any news events right now, the market's very emotional, so any other news events could really push price in either direction. I'm not really confident in either side right now, so I'm trying to remain pretty neutral, although I do kind of have a negative bias as far as how we keep spending time lower and lower. Going on to the daily. We can see we did have a break of one time framing. We were one time framing down and up at the same time, which was kind of interesting. And I had put that, which has a higher probability of going up or down. I mean, the odds would favor the downside, but the thing is, oftentimes, or to just quote Jim Dalton, seldomly does the market go in one direction on its way to its target, right? So, this thing could just rip up and then rip down, or vice versa. It could rip down and then rip up. We've seen kind of both, right? If we look back, over here, the market gapped down. There was a huge gap here, and it just got bought up, right? Even though it opened up here, huge, huge day, right, for the market, crazy day. It got into a little bit of balance, rallied up, got rejected again, came down, tried to test the lower balance, got bought up, right? Came back down into this previous balance, and let me erase some of this so we can really see this. So here's this previous balance, right? Ugly, sloppy balance here. It comes back down into balance. Here's where this balance zone is at. Gets bought up, holds, tests up into this balance, doesn't hold, trades into it, tries to hold. We get the gap down day, a retest of balance, and then a test lower. Right? What happens? Huge gap down, buyers buy it up, thing just alleys up, like, I mean, just in a storm back into kind of this ugly balance, but pretty close to previous balance, right? This thing tests up, can't get going at all. We have that sell off, sell down, right? What happens here? Finish on the low. This was just selling, trying to pound it out. Short covering. We get the P profile. We know that short covering typically is a in not, I mean, not typically, but typically, right? But short covering can weaken a market, and we saw that on Friday, right? So now we kind of continue this. Uh, Even though we did break the one-time framing down, we still are kind of continuing down, really from this level. But it is, as you can see from the lines we drew on the weekly, getting a little bit tight. But there's still some room in here on the daily for the market to kind of bounce around, right? When we jump into the profiles, we'll look a little bit more on what the profile is going to tell us a little bit. But basically on the daily, we had this big range that kind of took over and kind of set our parameters for balance on this 3 days is kind of what I'm looking at. So we have a little 3-day balance. And like I said, it'll become more clear when we zoom in on the profile so we can really look at it. But from here, we're just going to be watching this balance range. We've got chop. Pretty much all last week was just like the ugliest week in the world. But we are getting to some pretty significant lows, right? We had a pretty significant low back in February. And a break of that low, honestly, there's not much down here to protect downside. This put a little bit, and you can kind of see when we look at this, there's been, this low has been a very tested low, right? And so it seems very secure as it has held here, right? Became resistance, got above, held, moved up, and then consistently moved up with buyers coming in higher and higher, comes down, and then eventually gets tested right to it and is holding for now. But another test of this level probably cause it to break. And remember our gap that we're watching back on the daily. So if you're looking for those exact gap numbers, it is going to be 40, 37, 50 to 40, 14, 50. Right? That's going to be our gap down there. And so what I'm looking for is if there is a break, that's going to be the target of some of those sellers. And that makes sense because structurally, they kind of want to fix this gap. This gap's been holding since, I mean, almost a year now. This gap's almost a year old. So, but what that would mean for the market, at least in my opinion, is that you have this kind of 100% retracement, right? And that's not really, that's basically telling us that all of this price up here never got accepted, right? Or maybe got a little bit too overextended and is now having to try to consolidate a little bit higher. So I think a break of this gap or a fill of this gap could bring in some more downside pressure is basically what I'm getting at here from the daily. Now I want to take a picture of this so I can put. Sorry, I accidentally didn't send before I finished. Oh yeah, yeah. What do you what was your full question? Oh, another thing while we're on the daily that I want to talk about real quick is how much time we're spending below this 200 SMA, right? Um, and we've been talking about this for a long time actually. Um, but about the 200 SMA and how it starts to flatten out really has nothing to do with the SMA itself, just tracks the past 200 days. And so if it starts to flatten out while we're below it, typically in market history going back, we've looked back at I don't think this thing will actually let us go back to too far because it's aggregated, but we could look at the SPY and stuff, and basically the SPY tells us that it goes down after it spends a decent amount of time below the 200. It typically tends to go down farther, right? You can kind of see here, spend significant time, goes down farther. Right here, it's only down for a day. That's kind of as far back as we can go. 17 days real quick. Right here, I mean, here's a case where that typically or actually tends to not be the case too, and that's good to note as well. So just because we are underneath 200 doesn't necessarily mean that we are going to continue down, right? Gets under the 200, this thing starts to flatten out, actually starts to slope down, and then as soon as it does, the market recovers, right? Looks like the same thing here, except for it was kind of a fake out, and then the real rally after the 200 kind of folded over. And then this, I mean, this, I don't know if I'd really count as just kind of the COVID low, but this one is kind of the example that I'm looking just because it's the most recent, right? Yeah, everyone wants to compare to the global financial crisis, all that, blah, blah, blah. But, I'm trying to compare to the most recent thing that I have, and that's the most recent thing. A little bit of chop around the 200. We went lower, came back higher. Um, you would enter a trade and target the gap. Well, I mean, not like right now. So I'm not just gonna get short and just look for that gap, right? Some things have to happen for us for me personally, to look for something like that. We're gonna have to break the low of Friday first, and then break this low, and then break this low, right? I mean, there's certain things that have to happen. I don't just close my eyes and get short. I'm a level to level trader, and I trade intraday. I don't do a lot of swing trading on futures at all, for sure, but um that's the whole reason here, to identify and trade this level to level so you don't have to take that kind of risk, right? You can do the same with options, and there's a little bit more with options that you can hedge against your position as you get closer, which sometimes does take the profit off the table, but can also limit the risk, which is what I'm all about, limiting risk here. Let me pull up the profiles here. Um, Go ahead and detach the chart. Here we go. I have all of them on 4 ticks, really just because I wanted to be able to look at more general perspective real quick, and so we can kind of see. But first, we'll examine what happened on Friday, and then go from there. So we can see on Friday, we have to jam this down. This is on 4 tick increments too, just so we can really see it in case anyone is wondering. Um, but so basically, we open, peaked up a little bit higher, right? Couldn't break, really out of value. Spent very little time up there, very little volume. Came back down. We had a little bit of time spent, but really just a little bit of short covering. We had talked about that in the room. One time framing. We do know that these are mechanical levels. To think or swim and then grab this. we did have some mechanical levels early on, and then we did get a later on short covering rally in H and I, but more mechanical selling and then kept flushing it down, right? We had talked about that for those that were in the live trade room or those that tuned into the stream on Friday about how just because this is mechanical selling, it increases the odds that that'll get taken out. It doesn't necessarily mean that it's going to be that day or the next day. Of course, this obviously told us that it wasn't going to be that day. So basically, what you had is a lot of people buying this dip, and then, well, actually, not even. It was really just a bunch of short covering, and that short covering sparked a short covering rally. And you had a bunch of momentum traders that were targeting price, trying to time the market, locked in there. And definitely was an opportunity to make profit with the ranges in these markets. You could make profit on both sides, but there was a bit of buyers that got trapped at the end, which was notated on the chart by the late liquidation. And then we did have a price spike at the end, and during that price spike, we broke the low of the previous day, right? And so this is going to give us a spike in our profile, and we'll have to apply spike rules as we go into tomorrow. We can see Globex opening up, pretty much within the spike, or yeah, that opened up within the spike right here, 4207. That doesn't really carry much weight. More, we're looking to see how the cash open is tomorrow. And then as far as other levels, I'm going to be looking for on the profile, these mechanical references that we left behind on Friday's profile. The reason I'm not really, in market crashing mode, or how I've seen a lot of YouTube videos basically saying the end is near, and things like that, right? You have to maintain a perspective, right? If there's one thing that I've learned along my journey of becoming what I refer to as a risk manager, is you have to maintain perspective. If you're unable to maintain a perspective and you go into the day with a bias, well, it's going to be reflected. And that's not just in your trading, it's just in everything that you do. Um, so for me, I always try to maintain a perspective, and we see the last 3 days of the week as kind of just balance, really. Yeah, this last day was a dramatic day, and there was a lot of emotion involved, and some liquidation at the end, and we'll find out if it was um, true liquidation, or if it was some liquidation with some new money selling. We did get some volume in at that low. So that kind of makes me think, yeah, we're gonna probably test back down there a little bit, whether it happens in Globex or over tomorrow's cash session. The only one way to know, right, is to look. Spike is a move before the settlement. So the spike is a late day price probe, basically checking into new price that it hasn't been to in the previous day. So we can see it breaks the previous day low. So I guess you could technically draw the spike probably from the last to the spike. I'm going to take all of M period as a spike. Sean, yo, what's up, man? How are you? And basically the spike rules, right? If we open up within the spike, it tells us that prices haven't traded. And so we're going to treat the top of the spike as resistance, the bottom of the spike as support, until it breaks out and starts to develop value, and then go with wherever it develops value. If it opens up above the spike, that's going to tell us that we're going to treat this spike as support. And as long as it stays out of the spike, the upside will be the right side. We kind of did this, the same thing on Friday. This is a lot more of a spike than a Thursday, I mean. And then if we open up below the spike, it tells us that this wasn't just a late day price probe, and they want to trade lower and test lower prices. And then of course, the target value area low for 41.57, and then the low of that day down there. Um, it was interesting. As soon as we got off, we saw the market sell off, and we had talked about hitting this low. Of course, we were on the M contract, and we were on the H contract, and now we're on the M contract. Um, so which is dumb that they do that because we were just on the March contract and now we're on the June contract, but the June contract is M, but you know, whatever. Um, there's probably a reason, honestly, I'm sure there is. But basically, what this could have been also, and I like to, you know, like I said, I like to keep things in perspective. Yeah, we did have that sell off. We did get a little bit of volume on that bottom, but really we didn't do anything significant, right? Monday, Tuesday, Wednesday, Thursday, Friday, right? They're both kind of inside days to start the week, right? High of the week, low of the week, you know. So, like I said, a little bit of drama in there, but nothing to sell your house and bet on the low against, right? Not if you want to stay in the game. I mean, you might come up. You never know. You know, 50-50 chance, I guess, right? Um, but this could have just been a bunch of short covering right at the end of the market, right? They could have just said, okay, I've had enough. We did settle low. The last trade was down pretty low, and it could have just been a rebalance of all of the money that was basically in, because this area all the way down, that's liquidation, single prints, pretty thin volume all the way through, right? You can see a couple of them don't even have 1,000, and these are aggregated onto 4 ticks. I bet if I zoomed in even a little bit more, it'd probably look even thinner. Um, so that's the important goal here, is as we're doing things like this, to maintain a little bit of perspective. Get rid of the volume real color the background. Just so we can see it a little bit easier. And so I'm going to show you what we looked at on the daily chart on this chart. So we have balance here, right? And pretty much balance here, right? We'd probably draw it from here. So kind of overlapping balance lower. So a break of this, you know, would cause that price exploration to the downside, looking for that gap, right? This is at 4,100, looking for that gap below her. But remember that this thing can easily just balance just as much, right? Or it could have found buyers, test back up into this balance, right? And balance rules would say that it would at least test halfway up, or if not the very top of previous balance, right? And remember, we do have a gap above as well. Actually hit, where is it? Gap is, oh, it's right here. Gap, which is right around the middle of that previous balance. Hit a drawing earlier because there's a gap right here. That would make sense about the halfway point. Another thing that I'd like to point out too is if we were to draw balance here, you kind of see this bar that gets lower, gets accepted lower, right in the full lower range. That's kind of what we talked about here. We had some good news that drove the market up. Oil had come down, oil turned around at the end of the day, started ripping up, which we'll look at in a second, and then drove the market down. And so when you're setting up your trade plan, you want to um, make sure that you look for both sides, right? Don't just set yourself up, okay, if it gets here, I'm going to buy it no matter what, because everything can change at the drop of a dime, right? The news can change something, everything can change. So, yes, the TPO is going to assist you with setting up some rules and some boundaries, but remember, this is a skill. Uh, just because you memorize the rule book doesn't mean that you're going to win the game, right? So you do have to try to pay attention and really try to appreciate the art, as Jim Dalton refers to it, right? He says it's an art, not a science. So areas that I'm going to be interested in as we're going forward. I would like to see price get back above Friday's half back, and get accepted to look to take out some of these previous. We'll just go ahead and zoom in here. Take out some of these previous mechanical highs, right? That would make sense. If we can get accepted up here or down here in this lower spot below half back, might try a couple longs with a nice tight stop, looking, targeting the high of the profile. Really what I'm expecting is more chop going into tomorrow, just because the Fed is not until Tuesday and Wednesday, I think. So that's kind of what I'm looking for there. On the downside, if we open up in this low, depending upon how the Globex inventory goes, it's going to depend on, going to depend if it's long or short. Really not getting a lot of volume, right? Only 9,000 volume coming into a Sunday. That's about as light as it gets. Not really really a huge range here. 01 to 20, about a 20-point range in comparison, right? When we're looking at 100-point average on the day, it's kind of nothing right now. So we'll have to basically what we're looking at is kind of an overlapping balance and spike rules. If we're imbalanced, what we're going to be looking for is to fade edges, right? So if price is coming up to the top and we're not seeing any initiated buying coming in, we want to fade back to the mean. I would like to try that long out of balance to fix some of these mechanical highs. I do think buyers might try to target that just to get some stops out of the way, get some more liquidity into the market, and give themselves some room to move the market around, right? That makes sense to me as what the market maker should do. What he will do, right, is just a complete mystery. There's no way to know. And if anyone says that they know, like we know here, they're full of shit. So next, let's pull up browser. Viz. So one thing I do like to look at as well is to look at this app. We have it on Thinkorswim as well. Right here, it just shows you the percentages. So after the week is over, let's take a peek and see how everything's going. So we'll look at the monthly. Monthly's not looking great, right? Apple's down about 12% for the month. That might be their biggest losing month. We're gonna have to take a peek at that. Look at the weekly, 5%. You can see a lot of flatness, right? There was selling, you had some downside, and it was mostly due to these big players, but nothing extreme, because Apple's down, but Apple hasn't been down really. And then you see the day Apple had down over 2% on Friday, pretty bad day. We'll look at the year to date. Apple's still only down about 12%. Microsoft 16, really big losers. Tesla, Home Depot, that's a pretty big chunk, but anywhere from 10 to 15%. 16, I'll even I'll spot Microsoft the 1.25%. JJ, what's up, man? I'll spot Microsoft the 1.25%, so they can get above that correction period. But definitely something that you should check out just to see the rotation in some of these markets as the week and the day goes on. Something I like to look at. Take a peek over at the maps again, and I like to take a look at the world map just so you can kind of see what's going on. We can see the Chinese market is pretty red, right? A lot of red over there. Pretty mixed. Mostly the Canadian market actually looks pretty decent. The English market looking pretty red as well, with some green probably in the energy sectors. Most of the green probably around is in energy sectors, I imagine. But overall, it seems like everything is going red. That's going to tell you a little bit, right? If the rest of the world's doing bad, it's going to be pretty tough for one country to be doing well. Another thing I like to look at is the groups. I like to see the sectors, and then we just scroll down, look at the year-to-date performance, and you can see this consumer cyclical really getting beat up, tech getting beat up hard, communication services getting beat up pretty bad. But then everything else, pretty decent for the pullback. Energy obviously getting, absolutely, like crypto in there, just pops up, goes straight up. That's crazy. And then let me pull up. So what we'll do here is we're going to take a peek at a couple of things, and we're just going to look on the daily. We don't need that. Okay. So we can take a peek at Apple. I had been doing some technical analysis. Big Blaze, my man, what's up? You guys know how I love myself a trend line. I drawn some trend lines, and Apple said, you know what? Here's your trend line. I'm going for that 200, right? Something that I was kind of expecting. And this is something that has me nervous about the downside. Is Apple is getting towards that 200 moving average, and you know, last time it got close, we had this rocket ship, right? Everyone wants a piece of Apple. Everyone knows Apple's not really going anywhere, right? Everyone has an iPhone, and if you don't have an iPhone, you got the Galaxy, but you don't have that, then eventually you're going to have to, because they're eventually just going to take everything over, and then you're going to have, two choices: Camp A, Camp B, right? They pretty much do that everywhere already with everything. So, I mean, it's pretty easy to see. So, if they get that opportunity to buy into Apple on a discount at a 200-day moving average, well, I imagine that they're probably going to take the chance. And we can see, I mean, I can scroll this thing back even farther. There's GoMax available. And you can see Apple pretty much in its history, it goes back, I mean, to the 90s. Oh my God. Yeah. There's 85 here for Apple. But I mean, you can see for the past, year or so, pretty much every time it's pulled back down, it's bought up. Pulls down, gets bought up. I mean, where is even uh, this is COVID low right here. Let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It only closed below its 200 moving average during COVID for 10 days, right? If we want to compare something like the SPY, which is a composite of, the overall market, right? All of the stocks that are inside, Apple being one of them, fell a lot more days than 10 below the 200. So not saying that it is going to get bought up and could cause the market to rally just because it carries such a big market cap. And if we look, you can kind of see how big Apple is, right? Especially in the top 100, a pretty big market cap. And if we look in the NASDAQ, it carries a pretty big chunk as well. So if it does start to rally, it could bring a market rally on. Not saying that it's going to happen, just something that we definitely want to make sure that we're paying attention to, right? Another thing we want to be watching is the VIX. We can see the VIX closed up on Friday after testing that low. It got a lot of people excited. The VIX started to come down. And this is another thing that I had been mentioning for the past couple of weeks, and how the pull down feels a lot more controlled than it did back in January or even in February, right? That February low, if we're looking at the market, let's look at the 24th. Pretty sure this was the day that Russia invaded, right? You had this huge VIX spike on the 24th. And then, it's kind of funny, 24th of February, 24th of January. Is this the 24th? No, okay. I'm sure it's not. Like, I was like, oh shit, better mark my calendar. So if we compare this, or if we just, go look at the futures on these days, those are the days that we made these significant lows. 4th, 24th, right? And so both of those days were fairly emotion, right? This day was a Fed day. This day was Russia invasion day. So a lot of emotion evolved in these days, right? Which is why I said this pullback down this time feels a lot more controlled, right? Of course, watching these trends like a hawk, and if one of them breaks, there's your sign, right? But we do want to be watching the VIX, right? In order to get some of more upside, we're going to have to be thinking the VIX needs to come down, right? 30 VIX is just insane. It's crazy. And you can see the trend the VIX has been putting in higher lows. Hasn't put in this higher high yet. And we've got this mark on this 37.52. We've had it there since the 24th. A break of that, right, would pretty much announce to everybody some more downside is in play. But that's not to limit, saying that it can't just happen and the VIX could stay still, because when the VIX is at 30, you're pricing in a little bit over over 1.5% possible move. That's what's getting priced in by this volatility index. This is letting us know that a lot of people are still out there buying puts, right? A lot of fear in the market. There's a lot of ways to use the VIX, but just know in the VIX, when the VIX is high. Yeah, I thought I did. I'll add you right now. Um, but yeah, um, when the VIX is high like this, it's going to be basically telling us that there is a lot of emotion in the market, right? I sent you a friend request, Big Blaze. And when the emotion is high, right? That's when you should be managing risk better than ever, right? Reducing size if you've got a smaller account, even if you have a bigger account, it might be time to reduce some size. Remember, because of the big moves, you don't need big size to make some money, right? You really don't. So levering up super high is, probably just causing a little bit more stress. If that's been aching on your trading, that could be the sign. All right, let's take a peek at TLT. Really kind of falling here. It was correlated with the market, then it was uncorrelated, and now it seems to be kind of correlating back. Just something to watch. Another thing that I had mentioned, either I can't remember if I mentioned on the stream or inside of the the trade view, but TNX is up here at 20 again. You can see, I don't know how old this fib is, but it's been right, so it's at least 21 days old. But we can see pretty much every time if we compare this. So here's the 9th, on the 24th. Here, a big spike. Where is the 24th here? Not really big spike. But typically when this has been getting higher and higher and making higher highs over time, if we kind of zoom this thing out, this is going all the way back to the COVID low. It's been slowly making higher highs, but now it's starting to really inverse with the market, and this thing starts to get higher. We're at a previous resistance. If we start to get accepted here and start to trade higher, it could be a big break in the market. Other than that, really I just tend to look at some of these, and that's pretty much all your homework right there. Something you should be doing every single day, right? Not just today. It is a little bit time consuming. We've been on for what, about 45 minutes or so. It does take a bit of time, right? And if you can't do this, then you should And I'm just being honest. If you can't commit at least 45 minutes every single day to just making a trade plan, you shouldn't trade. Simple as that. Um, just telling you you're not committed, right? When you think about things, when it comes to your routine, this is part of your routine or it's not. When professional athletes prepare for a game, they prepare for the game the same way every single time. That's how they do well. Nimrez, what's up, man? And so if you're not preparing properly, what can you expect your results to be? You know what I mean? So don't expect to just show up and do well without doing your homework. It's just not going to happen, right? May have worked in school, you may have good grades on the test, but this isn't something that is one of those things where you can just do good on the test. It's just not going to happen because the test answers change every single day. So you may have done well on the test today, you may do well on the test tomorrow, but the day that you do bad on the test without having proper risk management and proper understanding, doing your homework, basically builds all those things into you. That day that you don't do well on the test is going to be the last day you're allowed to take a test because your account's going to be gone, right? And so you really got to think about these things and drill these things into your head. And I'm not saying this to try to be gloomy on a Sunday. I'm just saying these things because sometimes some people need to hear them. But yeah. Nimrez, what did you say? Are we expecting ETH to go up or down? That's the real question here. Okay. We can pull open a crypto chart. See here. See? Look at the market sometimes just does this to us. Get a nice little breakout, and it's like, nah, just gonna keep going. Classic. So Bitcoin just keeps rotating. Bitcoin is kind of setting up though for some downside if it breaks. You've got stops lined up on this break pretty much all the way down here, right? Stops, and these are prior session stops. I have it broken up into sessions on this one. So a break of this could just cause a fire reaction, right? There might be some profit to try to snag in here. It'd be kind of a tough one. It just depends. I think this low, similar to the market, was a pretty emotional low. As you can see, balance. We had that break of the high, which was kind of a stop run of these. So back down into balance. We get a break of the low, stop run, probably back down to the low balance would be the target, right? Not necessarily saying that that's where it's going to go, but typically is where it goes. That's good odds. Well, it would be better to wait closer to 5 o'clock. I think it's time for me to sign up for this boot camp. Yeah, I mean, it's almost done. I got a couple more episodes to record and then it'll be out. It's just like every time I go over it, I'm like, oh, I could put this in there. That'll make it a little bit better. Seeing a little bit of a breakdown here. Seeing some stops get ran right now. You must have heard I was on the mic, and they're like, hey, you want to run these stops? Let's do it. Give them a little bit of one of these, right? Stop run. That was a throwback. ETH is extra sideways. Let's take a peek at ETH real quick. Yeah. Yeah, ETH looks similar. ETH's more, to me, ETH's more in a downtrend than Bitcoin, to be honest with you. There goes the break on ETH too. ETH didn't really rally as much as I kind of expected it to, but it has a lot more support down here too. It's just kind of ugly as fuck. But the thing is that there's actually a lot going on with crypto. I don't know if you guys were reading this weekend about a lot of liquidity coming to the market with crypto, and that might be why this sell-off is going to be happening. I'm just gonna ask for this stuff, bro. Might be the selling. I was reading some Russian oligarchs are trying to, sell some of their crypto, and I heard it was like over $1 billion worth of crypto to get some liquidity, right? So it makes sense. Goes ETH. Take a peek at the overall market real quick. What are we doing this weekend? Big pull downs from a lot of things here. Sol kind of leading the way down though. What news? I just read some news about some Russian oligarchs trying to sell crypto. I mean, it could have been BS. I don't know. But basically, they're trying to sell like $1 billion worth of crypto to, get some money. Because basically they got all their shit freezed by the rest of the world. So unlucky. What else? I mean, this thing is just gonna be targeting stops now. Try to dive in a little bit closer to look at the volume, but yeah, it looks pretty consistent here. Next stop down that 24.96, and then back down into this value area low. So 2470, 2500, pretty recognizable number. You know what I mean? Pretty psychological number. So be some buyers there, buying on the 2500, mechanical. It looks to be. All right, Asia Open is not for another hour and 10 minutes or so. Am I still sending daily plans on the TPO Discord? No. I mean, I talk about some trades during the stream. I started streaming in the mornings, but no, I haven't just been posting any trades. No. It's a tough market to post a specific trade, right? A lot of trades posted, then people just copy the trade and then start questioning, where's your stop, where's your exit, all of these things. And it's tough to get back to everybody. So I just figured, hey, I'll talk about it on the stream. If people like what they see when the trade is going on, it'll help them make their own opportunity here. We're getting a nice little push. Remember I said, so if we can get below this low here, our target's going to be the low of this balance, this 36, probably 36,000, right? Nice round number, but this 36.3 is kind of what we're looking for. No shortcuts, right, Jake? And shortcuts in reality aren't going to help you anyways. You know what I mean? It's really not going to help you. If anything, it'll make you, more confident than you are. And then what happens is you go out and you get smacked, right? One thing that my dad did to me, and I used to look at it as like a did too, but really it was a did for, is when we were playing basketball as kids. I never beat my dad. I beat him my first time. I mean, now I just fucking destroy him, but when I was a kid, I didn't beat him for my first time until I was 17 years old. And I'm talking, I'd go in for layups, smack that shit out across the street. No winning, right? And the reason being, because if you think about it, if my dad would have just let me win, I'm thinking, oh, I beat my dad. I know my dad is good at basketball. I go to the park and I'm playing, some random people against, thinking to myself, oh, I'm good to go. And then I just get fucking smacked, right? So, in reality, the shortcuts sometimes are nice. When they work, you love them. When they don't work, you hate them. Either or, they don't teach you anything, right? If anything, they hurt you, in my opinion. I will post some things that I'm looking for, I'm sure, but especially now that I'm back and I'm feeling better, but probably Probably not any really like, hey, buy here, things like that. More of just a plan so you can start to fish on your own. Short now, a little bit late, my guy. A little bit late. If we start to build some volume down here and start to break these lows, you could probably catch it in a nice little short, 37K to 36.3 or 3600 or 36,000. I mean, there's definitely opportunity. I don't know if there's any news accompanying this. Um, Let me look on Twitter. Where's Twitter at? We want to see the latest tweets. Jim Cramer tweeted, "I never like it when futures are up for no reason whatsoever." I mean, come on. He shouldn't even be allowed to tweet shit like that. That was the dumbest fucking thing. Um, China may cut RR and interest rates to stabilize growth. Elon's tweeting, North Korea may test ICBM early this week. I'm just trying to start shit just to start shit. Elon tweeted, "What are your thoughts about profitable inflation rate over the next few years?" Ooh. Thank you, Nimrez. Yeah. Yeah, my family as well. Thank you. EU said to vote on whether or not they intend to ban Bitcoin and Ethereum. That is big. That is big. So of course, remember. Yeah, I saw that. That rumor as well, Alex, that Russia's asking for China's help. Um, It'll be interesting to see what comes out of that. But remember this sell-off, right? Especially news-driven, and it probably is because if they intend to ban crypto or not. But remember the emotion in it. So remember if, like I said, I think that a lot of this was emotion-driven. We can see pretty much traded straight down and then straight back up. That's a V for the most part. I mean, on the way up is a little bit more choppy. The way down is pretty much straight. We know that's typically how trends go. Sometimes we get lucky. But higher lows and then a move up, right? Back into balance, move up. So as we're emotionally getting pushed down here, be careful of getting short at these lows. Okay. Remember about the emotion in the market at certain levels. I mean, it takes time, but I mean, you can kind of feel it when you see something like that and you look back at the previous bars. I mean, try to exclude the weekend. The weekend didn't do anything. But we can see, you know, big moves up and then just small balance. So big emotion and then right back to it. This thing is big emotion could just come right back up. So you've got to be careful here. But other than that, I don't really have anything to look at. One thing to note, we've got the NASDAQ up about 0.5%. The Dow's up 0.5%. The Russell's up a little bit over 0.5%. Yes. The VIX is up, about 1%. Bonds down, oil down to 107, right? Bitcoin down 1.5%. Gold pretty much just hanging out flat. You can see what happened with what's going on with gold with this whole thing. Similar to oil, right? Pretty much a lot of commodities. This is bonds, right? Bonds are kind of getting smacked around. They've been getting smacked around. This is what the Bitcoin futures chart looks like, right? Very spotty, very in and out. You can see on a Bitcoin futures chart, these past 2 days have really just been in balance. Not really much going on. Nothing really crazy to worry about on that front. Russia's I'll check on the news. Oh, and then let's take a peek. We might as well while we're here. Take a peek at the economic count. So today, or let's just look at this. Going into Monday, not really anything significant. Tuesday, we've got the PPI numbers. We also have the Fed that day. And then Wednesday, we've got some bigger numbers coming out. The retail sales numbers coming out in the morning. This crude inventories is probably going to be a market mover on Wednesday, 7:30, about an hour after the market opens. And then the FOMC press conference, right? Wednesday, 11:30 Pacific time. Remember, if you didn't push your clocks forward, well, at least here in the US, unless you're in Arizona, you had to push your clocks forward. End of the week, just initial jobless claims, nothing really crazy. And then existing home sales, more meetings from the Fed, right? All the Fed speakers coming out on Friday. So Friday afternoon could be, a fairly big news-led event. Remember, big money likes to price themselves in 2 days or tries to get in the right position about 2 days before the move happens. So, look for that. Of course, at any point, emotion can really cause the market to break a trend or break the path of something that it was doing. That's why it's important to understand the market profile and understand the information that these TPOs can offer you here, and you will understand what each of them, right? The boot camp will be finished soon, right? Hopefully, I can get it out, as soon as possible. I am working on it; just takes time, right? We'll go over the plan for the ES one more time, just for those of us that tuned in late. If you guys could do me a huge favor, go ahead and smash that like button so we can get to share this information out with more people. But basically, what we're looking at here and what I'm looking at is balance, right? We basically have a 3-day balance here. And so a break of the balance to the low, which would be below our spike, is going to cause some downside. Looking to fill that gap we said was at 40.38, I believe, or 40.37. A break of the upside of balance is going to be testing us into an upper range of balance. Zoom this out so we can see real quick from the previous week, right? Remember, Monday, Tuesday, Wednesday, Thursday, Friday, right? So we had pretty big moves on Monday and Tuesday. We see where all the volume is at. ADP profile, short covering, hold, bounce. Now we're basically just kind of sitting in position. Am I in any position now? No, I'm not. I typically don't trade Globex unless we get some big opportunity. And with how weak the volume is right here, 14,000, not a lot of opportunity. Pretty weak and not really worth the time, I don't think. So we'll just have to wait until the morning, right? If we open above the spike, good opportunities to look for longs if we see some new money buying, right? If we open up above the spike, I do expect some short covering. So try not to get trapped. We saw a lot of people get trapped on Friday. They weren't paying attention. It happens. A break of this balance higher would probably be looking to test this high and fill this gap that we have up here, right? And then the break of the low, we have to scroll over forever to find that gap, but it's down there, and that's probably where they'll target. Other than that, that is pretty much it, right? We've kind of have defined ranges. Basically, we want to pay attention to value and how value is forming. If value is just forming inside of the previous week's range, we can expect more rotation. If we start to get some value forming below this previous week's low, we can expect some more continuation. Definitely looking for that target low. Pay attention to the news. It's going to be very important this week. We've got this Fed speaker and also any, peace talks, any takeover talks, right? Any big significant news can really push around the market. Remember, it is very emotional now. And be careful getting lulled to sleep with days like this. Like I said, we had 2 up days that were almost down days, right? This day opened here, finished here. This day opened here, finished here, right? These are 2 green days, but on each day, value and price shifted lower, right? And this last day tested back up above this previous day's value and said, no, thank you. Traded back down into this day's value, got accepted, and then liquidated lower, ultimately breaking that low towards the end of the day, right? So being kind of an outside bar, really emotional bar here. It's just I'm just trying to keep you guys on perspective, right? Don't sell the farm yet, but also don't buy a new farm either. Try to stay neutral as the day goes on. Other than that, you guys have a wonderful day. I will see you guys in the morning. For those of you guys that are in the Zoom with me in the morning, I'll probably pop on maybe like 6 or so as I start to get my day ready. And then from there, we can just kind of continue on. We'll just have to take a break while I take the kids to school, but no biggie. Other than that, you guys have a wonderful day. Make sure you're managing risk and sticking to your trade plan. And I will see you guys tomorrow.